Hey everyone, Couch Investor back to another video for today. So, why did SoFi pop yesterday before the Fed meeting? Well, for one specific reason, someone at SoFi is still extremely bullish on the company and has bought $5 million worth of shares. Who is that? It's the CEO, Anthony Noto. Now, there is other things to discuss with regards to SoFi, such as, their crypto-related business. Obviously, right now, with everything that's going on with FTX, SBF as well, it's a tricky situation. SoFi obviously offers crypto services. Remains to be seen what happens with that, but we do have some information which we're going to discuss throughout this video. But currently, this is what SoFi looks like. So revenue has been trending up, free cash flow has been trending down, return on equity is still negative, gross profit margin in the last 12 months over 77%, that's fine. Now with regards to valuation, obviously there is no need to look at PE since, not existing. But if you look at price to sales ratio in the next 12 months, we're sitting at 2.3x, not that expensive, and a price to gross profit in the last 12 months, 4.2x. So for a company like SoFi that is still growing arguably pretty fast and faced some headwinds, still faces those headwinds as well going into 23. Unfortunately, to be honest, valuation-wise, is still okay. And so maybe that's why Anthony Noto bought around $500 million worth of shares. I believe this was filed yesterday. Obviously, the date of the earliest transaction was December 9th. So the prices are $4.36, $4.29, and $4.58. Now, there's only one reason why an insider buys shares of their own company is because they're extremely bullish. There are many, many reasons why an insider would sell shares. And obviously, if you've been following this channel for a while, you know that this is not the first time that the CEO has been buying shares, but it is the first time that he has bought shares for, that amount, for $5 million. So he does think that his company is pretty cheap right now. Otherwise, he wouldn't have spent that much money on it. So that's already a bullish point in a overly bearish market. Now, before we go and talk about the crypto risk here, if you want to support me and this channel, first of all, would really appreciate it if you hit that thumbs up button and subscribe if you have not. And if you want to support me further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So, talking about crypto. So this was a while back. So SoFi's digital assets activities pose significant risks to both individual investors and safety and soundness. Obviously, right now with the whole FTX thing, this is probably something to actually look at. So there was a letter to SoFi that expressed concern. We're going to touch on that in just a bit. But in short, the lawmakers asked SoFi to explain how it lists cryptocurrencies for sale, how it addresses customer complaints, and how it determines the appropriate credit, market, and operational risk capital requirements for digital asset exposures. So, going to that letter. So in February 2022, SoFi completed its acquisition of Golden Pacific Bancorp, a bank holding company, or BHC, and its subsidiary Golden Pacific Bank, a national bank. As part of that transaction, SoFi received approval from the Federal Reserve to become a BHC, a bank holding company, and elected to be treated as a financial holding company, FHC, subject to consolidated supervision by the Federal Reserve. Additionally, SoFi received a conditional approval from the Office of the Comptroller, it's a weird way of writing it, of the Currency, or OCC, to create a full-service national bank subsidiary insured by the Federal Deposit Insurance Corporation. Now, the issue is that following its conversion to a bank holding company, SoFi continues to operate a non-bank subsidiary called SoFi Digital Assets, an exchange for retail investors to buy and sell digital assets. In its letter dated January 18, 2022, granting approval, the Federal Reserve noted that SoFi is currently engaged in crypto asset related activities that the board has not found to be permissible for a bank holding company or a financial holding company. SoFi's most recent annual report states that these impermissible activities are conducted by SoFi Digital Assets. Now, with all that said, under the same letter, SoFi has 2 years to either divest SoFi Digital Assets or conform its activities to the law, with the potential for up to 3 one-year extensions in the Federal Reserve's discretion. Now, the problem with all of that is that in a separate letter addressed to the Federal Reserve Vice Chair for Supervision, Michael Barr, SoFi committed to not expand its impermissible activities, but apparently the company has expanded its digital asset retail operations, even though they know that they either have to divest that SoFi digital asset part or, well, come out with another solution. And obviously, especially right now with everything that's going on with crypto, of course, this will face extra scrutiny. Now, a spokesperson from SoFi has made a statement. So in a statement, he said that the company allows its members to buy and sell cryptocurrencies, but does not provide any other type of crypto-related financing activities. Continues by saying that SoFi takes our regulatory and compliance commitments seriously, including our non-bank operations within the digital asset space. We believe we have been fully compliant with the mandates of our bank license and all applicable laws. Additionally, we maintain consistent, constructive dialogue with each of our regulators. Cryptocurrency remains a non-material component of our business. We look forward to sharing the requested information with the senators in a timely fashion. And more importantly, the spokesperson also said that SoFi had no exposure to FTX, the FTT token, Alameda Research, or Genesis Global Trading, which that last part is extremely important and very, very comforting to hear. Because probably if it had exposure, then this will face even more scrutiny and maybe even financial implications. And now before we conclude this video, a quick look at the chart. So we're here on the weekly chart. We can see here a big green candle, obviously after that news broke out that the CEO bought $5 million worth of shares. But let's see if it can hold, because currently it sits over that 20-day moving average. The green one is 50, the blue one is 200. Probably this is something we will see hopefully in 2023. But let's see if it can hold. If it can, then we need another big green one that goes over that 50-day moving average to see positive momentum and continue, well, maybe not continue, but start an upward trend. Now, of course, remains to be seen what happens with the Fed. I'm currently filming this before the answer is out, so that will certainly impact the stock. So to conclude, to me, nothing really changes with regards to my position with SoFi. Each and every quarter, the company executes as it should, and even sometimes even more than their own guidelines. Of course, the company faces some headwinds. We thought those headwinds will turn into tailwinds already, but apparently that is still not the case. But other than that, as we've seen the last 2 years, even with those headwinds, the company knows how to navigate those muddy waters. And so for me, it's still a long-term hold. Whether or not I would rather buy SoFi today or later on is up to me, because in the current market, there are many, many opportunities. But do share your thoughts down in the comments below. Do you think this is a no-brainer right now, especially going into 2023? Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. I'll see you all in the next one. Bye-bye.